All right, so we want to just use the exact same rules if we're going short. We're just going to turn everything upside down, okay? So let's look at the same rules to go short. Once again, key number one is we must trade in sync with the trend, okay? So here we have another setup here. Someone just looking at this would say, well, there's really no trend. We're waiting for some economic report, or my support and resistance doesn't give me any trend, so I'm staying out of the market. Too complicated. All you have to do is apply a 50-period simple moving average and ask yourselves, where is price or the majority of price in relation to this moving average? If it's below the way it is here, then your overall trend is down. That's it. It doesn't have to be complicated. So in this scenario, we're looking at an overall downtrend, meaning that if the trend is down, we're only looking for short setups. We're never, ever going to look to buy if we're below the 50 period. Likewise, we're never going to look to sell if we're above the 50 period. So with this scenario right here, someone would say, well, the market is just trending sideways. It's waiting for some report. Whereas you would say now, the savvy investor, no, the market is in an overall downtrend. It's looking to go lower. Okay? Now we're going to look for a bar that closes in the bottom 25% of its range. All right, so we look at these bars here, and these bars in red all closed in the bottom 25%. Remember, the bottom 25% just means the very top of the high of that day and the very low, the low of that day, and then it's the bottom 25%, the bottom quarter. We have 4 specific clues here that the market is telling us it wanted to go lower. Now, this doesn't work like clockwork all the time, but we can enter upon the confirmation trend again by selling on the next bar only if price trades 1 to 5 pips below the bar that closed in the bottom 25%. So in other words, we see here that we have 3 bars that closed, but nothing really happened. Even though you could have entered all of these places right here, there wasn't really much of a move down. But as we see here, we have 1 more bar here that closed lower. We could have taken advantage of this and entered and ultimately taken advantage. Why? Because the market, not some pattern or not some economic report, but the market was telling us it was most likely going lower because we were below the 50, and it was giving us clues that bars were closing in the bottom 25%. And as soon as we started going into the steep downtrend, look at all the other bars closing in the bottom 25%. You could have taken advantage of all these. So oftentimes, as we see here, you have to stick around for a little bit before it kicks in. Okay? Does that all make sense to everyone? You see how this all applies and how you can, learn to listen to the market? Once again, just let me ask one. If I'm coming through loud and clear, just kind of make sure you say yes. I know I started a little late here and I didn't get a chance to do a sound check, so I just want to make sure you're hearing me. So kindly answer yes or no if I'm coming through. Okay, thank you. Thank you for the people at FX Street. Sometimes I think I'm giving webinars and they can't hear me if I don't see any response. Okay, so we've seen now that we've gotten all these 3 key elements that will help us get in sync. It will show us a clue of what the market wants to do, and then we have this entry technique. But as of right now, I've only given you 3 key elements of a trading strategy. Please remember that this is not a trading strategy, okay? This is not an actual idea or method in which to trade. I've only given you 3 pieces of the puzzle. In order to have a valid trading strategy, you need usually about 5 or 6 rules, okay? So I've only given you about 3. We still have to have a little bit more structure. So we still need to know how to apply this. I see some people are asking questions. How do we see if something is in the bottom 25%? Let me just say real quickly. I know a lot of people get stuck on candlestick bars and saying, well, can we use candlesticks? It doesn't matter if you're looking at a candlestick bar or if you're looking at an open high-low close bar. It doesn't matter. All we want to do is see that we took the high, which would have been right here, the high of this day, and the low, okay? Let's say this was, just to make things easier, let's say this was 400 pips from top to bottom. That was the range, all right? So you know that the bottom 25% is the last 100 pips. So if we close in the bottom 100 pips, because we divided it by 4, then we know that we have closed in the bottom 25% of its range. All you want to do is take the measurement, the range from top to bottom, divide it by 4, and if you close in the bottom fourth, that's the bottom 25%, okay? And you would just do the reverse. If you took the bottom to the top, divided by 4, divide that range, whatever that is, however many pips that is, and then see if you close in the top 25%, which we did here. But the only reason we don't care about this is because we're below the 50-period simple moving average. Okay? Makes sense? Now, as I stated, these are just pieces of the puzzle, extremely important pieces of the puzzle, but they're just pieces of the puzzle. Please do not say, wow, this is amazing. I'm going to start trading this today or tomorrow. Okay? This is not a strategy. A lot of people, what they do is they say, Steve, can you send me the video of that webinar you did? Because I want to see that strategy. This is not a strategy. I've just given you 3 pieces of the puzzle, but they don't make up the entire strategy. Now, how can we put this into a strategy? Once again, I stated strategy number 4 is probably our most consistent and popular strategy. It works in any market, in any time frame, and it employs the 3 things I just shared with you. But it also has a couple of other rules which I can't share with you because that's for the members who purchase the strategy. But let me just show you how it works, some of the highlights of the particular strategy. This strategy, even though it's one of our best, our most consistent, is for all traders. So it doesn't matter if you've been trading for 2 weeks or if you've been trading for 20 years. We have hedge fund traders, trading strategy number 4. We have people that have just been trading for a week or 2, trading strategy 4. The same exact rule, okay? So it doesn't matter how long. Don't feel, well, Steve, I'm not that advanced. I guess this would be a little bit too complicated for me. We are an educational company, and we stay with you. We walk with you through the trade and through the actual signals so you can really learn how to do it on your own. This is for traders looking to catch quick momentum moves, okay? So it's not something that you're going to be in the market for weeks or months. You can if you want to. We teach you how to exploit that and stay in the trade longer if you like. But it's really, you're in there for any from 1 to 3 bars. It could be 1 to 3 5-minute bars. It can be 1 to 3 weekly bars. It just depends on what time frame you choose. Its intensity level from 1 to 3, with 1 being the most intense, 3 being the least, is 2. That's very moderate. It only uses 1 indicator. Why? Because it's mainly a pattern recognition strategy. Excuse me. So it's so simple. It's extremely simple. This strategy was taught to me on the floor roughly when I was trading, and I've been using it ever since. Remember, it can apply to any time frame, any direction, and the beauty of it is you can apply to any market. So if you trade the Forex, but you also like to trade stocks, you can use this on any market. And then lastly, our edge is consistency. I'm not going to sit here and tell you that every trade is a winner and every trade will make you 500% on your capital. I'm not going to tell you that. I'm going to tell you, though, that this is extremely, extremely simple to use, and it has extreme consistency. In other words, 2 steps forward, 1 step back. And in my 37 years of trading, this is what will make you successful. Not some strategy or some technique that someone promises you the world, but something that is consistent. Because traders who've been trading for 30, 40, 50 years are all about consistency. They're not concerned about hitting home runs. Every once in a while they will hit a home run, but they're more concerned about they'll have a technique that will stand the test of time. It doesn't matter if they hit a home run and then lose everything. What you should be more concerned about is a technique that is consistent. 2 steps forward, 1 step back. And that's what strategy number 4 gives you. All right, so let's look at some examples here. I'm going to show you some older ones just to show you how consistent it is. And then I'll show you some current examples, things that happened just last week or just in the last few days. All right, here's an older chart of the euro dollar. We ask ourselves, where is price in relation to the 50-period simple moving average? Obviously, price is above. So this meant in this particular time frame, a year or so, we're only looking to go long the euro dollar. So we look for strategy 4 setups and look at all the buy setups here. Now, every one of these setups here was a winner of roughly a minimum of 100 pips, except for this one right here. So this is what I mean by consistency. I'm not going to promise you that every trade works out, but this one you would have entered, and it wouldn't have done very well. You would have been stopped out with a minor loss. But look at all the other winners here. Look at all the gains you could have had. All right? Each one was a minimum of roughly about 100 pip gain. Now, this works to the downside. Here's an older chart of the Australian dollar. Where is price in relation to the 50 period? Price is below. So you don't have to wait for some guru or some chat room to tell you what you should be doing. Automatically, you know that you're only going to be looking to go short if price is below the 50. You see how you're empowering yourself with this information? You don't have to rely on some news report or some economic condition or some trading guru. The market is telling you what it wants to do. It's telling you it wants to go lower. And then you apply all the rules of the strategy and look at all the sell signals you could have been profitable on. Okay? This is how consistent, how beautiful and simple this strategy is.